say good night here in Pittsburgh, Pennsylvania. Might not be a good morning. I've got to go into do the kidney stone pulverizing starting at 6:30 in the morning. Man, oh man. But I just wrote a check for the down payment of the barn, so hopefully within the next 30 days I'll have a barn. All right. Well, as we can see, we're not in any direction of this market, just slow sideways, which with the expectation being that the Dow is going to eventually come back and support on the T line. Up anyway, so as we can see, even though there was some buying in the Dow, obviously this was not a bullish market day. The NASDAQ sold off excessively. The S&P, they keep doing that. S&P 500 is slowly rolling over also, more than likely heading back to the 50. Okay, I'm up here in the North Hills, up near Cranberry. And the transportation index also came back and did kind of a very indecisive trading day with like a second evening star signal. So got the piercing signal, and now they've closed just below the T line. So unless they're able to support this uptrending channel, more than likely we're still in still going to be in a downtrend here for a while. All right, some of the other commodities. Crude oil. F.CL. Crude oil is still in this downtrend, trying to do some bottoming action here, but still has not been able to get above the T line, which means natural gas, which there is plenty of. Well, what's happening here? Natural gas isn't going anywhere, and it's still relatively cheap. Interest rates, they've been pulling back. Bond prices pulling back. Not still anything that would be any major reversal in interest rates. Just kind of waffling here in this this sideways mode. So interest rates aren't affecting anything. Gold might be doing a bullish harami today. It needs to open positive and trade positive to stop the downtrend, but we're still below the T line. Silver, same scenario, trying to bottom, but still in this downtrending channel. I am right now long lean hogs because it's doing somewhat of a J-hook pattern. And notice how at the 50 and the T-line crossing, it just popped there and started back up. So long hogs, but right now short cattle with it trading just below the T-line, with the impression that if they failed right up here, again, notice your reversal signal, the big doji, long-legged doji. Now we're trading below the T-line. More than likely, at least the first target is coming back to the 50-day moving average. I don't know why that's there. Oh, what else? Was playing around a little bit with cotton, but it was starting an uptrend. I was looking for it to open positive and do a breakout, which it didn't do, which means we're still caught in a sideways channel. And soybeans still Still in a slow downtrend. Nothing changed here. Wheat, same scenario. Nothing's changed yet, even though it's looking like it's trying to bottom. Nothing there. All right, and the dollar. Let's see. Dollar gotten whacked here in the last few days. Ever since the big bearish engulfing signal. You trade the current month on your futures? Yes, most of the time. As long as it's far enough away, because essentially what you're trying to do is emulate the cash prices as much as possible. The cash prices are usually going to dictate what the current month is doing. No, I'm not in cotton because I was looking. I went long today when it hit the T line and started bouncing up. See if I can show where. I was going long somewhere in here, and notice how it kept waffling. So I finally closed out, because the reason is, if it's not heading back up and it's waffling, there's no sense trying to trade it. It means they don't know which way to take it at that point. So that's, again, another reason why you let the charts tell you what the market is doing, because if it's not trading in a trend, go someplace else. So it's a little bit easier to trade commodities because there's only about 30 out there that you could trade, which includes the currencies. You've got the metals, you've got things like coffee, which is still in a downtrend. You've got cocoa, which hasn't really bottomed out yet. So you can basically, in 30 charts, see which ones have a trend to them. And what is the other one? Sugar. Sugar's still in this downtrend. So this one would have been a little bit easier to trade, because notice when you had your doji gap down, even though you're in a downtrend, it told you there was still going to be some more downside. Okay, let's go through some of the psychology of being in a sideways market. You definitely get out of them when they close below the T-line, like on Fold. Fold had a good-looking J-hook pattern setup, but then you had your bearish doji sandwich and it closed below the T-line. It told you it was not going in the right direction. However, we can see that today it did a doji off the 20 and just below the T-line. Makes it very simple. If we see a Morningstar signal, we have the T-line. Apple will get to CQG is the name of the chart. The charting package is CQG. That is the charting package. That's kind of the grandfather of all the charting packages. Now, we were looking to buy HJ or HPJ today on positive trading. So this is another example of why you want to see, once it opens, I'd rather pay a few pennies more knowing it's moving in the direction it should be versus seeing it open and immediately start trading off. And when it does that, it might waffle in here, but it makes it very simple. If they came back up through the open, that tells me the bulls are taking control. That's when I buy. On the other hand, if I see it open positive, market doesn't look like it's really robust, I'll wait for a few minutes to see which way. And that few minutes may be anywhere from 2 minutes to 20 minutes. You buy a Morningstar signal on the open or after the signal completes. After the signal completes, what we were looking at, Fold. On Fold, I would want to see this close above the T-line doing a Morningstar signal. Then I'll buy on a positive open after that. Because there's just as much likelihood, not just as much, but there's a good possibility that if they open up positive and start trading positive, they could always come back and close it back below the T-line, and you should be back out of that position. Okay, let's see. Oh, no, some people had been following NPSP because of the kicker signal. But when they gap it back down like that, first of all, if the kicker signal is working, they shouldn't be trading back below, especially the open of where the bulls took control. When they gap something back down, there's only one thing you really want to do is close out the position. Now, if they'd gapped it down here after a kicker signal, I'd give it a little bit of time to see if they're going to take it right back up again in that trend. But when they gapped it down that far, close out the position. Now, I say that kind of rapidly. Through the years, I've discovered if you're sitting here waiting for something good to happen after they've gapped it down, you're going to get crunched. You're going to be selling out down here. And that's not speculation. That's the voice of experience. So anytime you see something not doing what it's supposed to, close out the trade, because the reason we're analyzing a trade in the first place is because we know what the expected result should be. And when the expected results turn drastically different, close out the trade, because right now, with it opening down here, you had no trend or no signal to hang your hat on. Just get out and move on to the next one. Same scenario with our MNDL recommendation. It had a nice gap up signal, but today it traded back below the T line, needed to be closed out. Because if you're looking at this chart, would you want to be buying this chart? Definitely not. So don't make your decision, and I'm saying this again from the voice of experience, don't make your decision whether to stay in and out because you own it already and you hate to take a loss. I've discovered through the years that if I take a loss quickly, that gives me more time to find something that looks like this, where that loss disappears very quickly. So anyways, that was more to kind of accentuate the negative mental process that we go through. And so here's another key element, that if we see the pattern developing and then it fails and close it out, if they start taking it right back up above the T-line, buy it back. Because what do we know about the T-line? As long as you close above the T-line, you're going to be in an uptrend. So, and remember, we said also it had to open positive and trade positive to stay in it. So I know there was a few people that stayed in it and got a good trade out of it. Wait to the end of the day. And which one is that, Joe? And let's see. Oh, and we recommended Loco, and it pulled back. It did what it's supposed to do on the open. So we were buying. The only thing that's keeping us in now is the ANVR. Wait to the end of the day. Oh, to buy it? No. If I see what you're asking. Okay. No, you don't necessarily have to wait to the end of the day. If we know that this is an uptrend and then they close it below the T line, we need to see it open positive. If we own it, we stay in it. If it opens positive and trade positive. If we closed it out here, all it has to do is start trading positive again, because that's telling us they're coming back up above the T line. It's not time to be out of that position. So are there times I close here and buy back here? Definitely. Because there's only one criteria that I'm interested in. What is the chart telling me what the direction is? If I've gotten scared out of a position, or at least not scared out, if I did what the chart told me to do, which was close it out, and the chart told me to be buying back, all right, so I missed out on some profit opportunity. But I'd rather miss out on some profit opportunity than hold on to something where the next day they might be opening it down here. Can ANVR still be bought? I wouldn't think so. Let's make this. I mean, this is what we were looking for. I mean, even if it was a slow trade. We were to be happier than pigs in doo-doo if we got this type of move. The fact that it's moved that big in one day, I probably shouldn't say no. It shouldn't be bought. Let's see what it looks like on a much bigger. I have to readdress that. No, it can still be bought. I'd want to see it trading above today's open. I'm sorry, today's close, because this basically is a big fry pan bottom breakout, and I proved on whatever drug they're working on. So if you are buying this, obviously you're going to be much more nimble. You probably want to be trading off the 10-minute chart. Low code, yes, it could be a bearish engulfing signal, but remember, the bearish engulfing signal needs to be confirmed with a close back below the T-line. You've got two decisions to make, Cristobal. If you didn't close it, it has to open positive and trade positive. And number two, yes, even a bearish engulfing signal needs to be confirmed. AVNR down after the market? Okay. So if AVNR opens lower tomorrow, if I had owned it and it opens down here, I'm closing out the position because that tells me they're probably taking it this way for a while. But I immediately put my buy stop right back up here because if they open it lower, take it down, and then come back up, that tells me whatever profit taking was done early in the day is over. Okay, let me get through some more here. We're also, we've got charts that even soggy markets, here's our TGTX. As long as this stays above the T line, you stay long. Now notice, Cristobal, right there, we had kind of a bearish engulfing signal, closed right on the T line. It needed to open higher and trade higher. Now, it got scary during the day. I think they opened it and took it down very quickly and then brought it back up. That's why I always wait for the end of the day, because if it's down here at 10:30 in the morning, how much further can they take it down? Usually not very far if they've already taken it down pretty far. But which direction was the trend in the first place? It was up. So I always kind of wait for the end of the day. Worst case scenario is it's here at 10:30 in the morning, and it's here at 3:45 in the afternoon. So it didn't work. That's when I close it out. And let me see what else we got here. Oh, BBRY, still got a good looking chart. There's that little cup and handle, kind of a doji sandwich. And this is a case where the doji sandwich, if this is day one, and this is day three, which is supposed to be the equivalent of day one, it's not unusual to see that if this is only a small candle, the next day they do another candle where the equivalent of these two candles is the same as this right here. BDSI, another one that has to open positive and trade positive. There wasn't any news on this one today other than they were selling off the biotechs. So again, this one has to open positive and trade positive to stay in it. BBRY, yeah, can still be bought here. And INFN, still want to hold on to this one as long as it's trading above the T line. And DYAX should have been closed out. But notice where it finally supported, right here on this bottom of the trend channel. So if it wasn't closed out today, it has to open positive and trade positive to stay in it. Should have been closed out, but I'd give it one more day just because of the magnitude or the credibility of this support level. 1, 2, 3, 4, 5, 6 times it's been here. So see if it opens positive tomorrow. And IMPV, another one that should have been closed out, but also give it one more day. It has to open positive and trade positive. If it opens lower, close out the position. Okay, and on the other side, we also have some short positions. OC has a very simple analysis. Notice what happened exactly at the resistance level of the 50-day moving average. You had kind of your doji followed by a big down day that took you back down through the T-line. What did that pretty much tell you? It told you when they hit the first resistance level in this downtrend, they were selling back off. You stay short. Where's the logical place to be looking to go or stay short to? Well, right now there might be a case where it trying to bottom here at the existing bottom. If this opens lower tomorrow, you can still be shorting it because that means the next level, which would be this downtrending channel, somewhere way down in here is probably the next target. And UFS, this is another good example that if you're short something, use the previous day's open as a stop. If it comes back up through there, that's not the direction it should be moving if it's in a downtrend. So this one should have been stopped out. When they've gapped it up to the previous day's open, what can you kind of anticipate? A kicker signal. And if you're short, you definitely don't want to be in a bullish kicker signal. You close it out immediately. And Cree was acting well today for the short side. And this has that slow curve. And notice what it did a few times. Came up, hit the T-line, sold off. Came up, hit the T-line, sold off. Now they've gapped it down. Now we're getting pretty close to this downtrending channel. So I'd look for another day or two to the downside. Let's see. Sales got a little bit iffy down here. Another short that's, these charts keep getting, that notice what it couldn't do. Couldn't close above the T-line. So if you were short, or even if you covered your short position based on this candle right here, get ready to re-short it, because basically you're going to be looking at a bearish J-hook pattern, which should take you down into this area. Okay, what else do we got here? Some other charts right now that look good. PPP has kind of a morning star signal. Now remember, a morning star signal is a big down day, a day, or 2 days of indecision. 2 days of indecision is still considered a morning star signal. And then notice what happened on the third day. After an inverted hammer indecision, they closed it positive. We know there's an extremely high probability that if they close positive or trade positive after an inverted hammer, especially in the oversold area, that you're probably going to be in an uptrend. So that makes for this being a very a strong argument for going long tomorrow on this type of chart. REX was another good-looking chart. No, it's not. What happened here? That's a good-looking short chart. RAX. There's it. Okay, that's what I'm looking for. Somebody miswrote this. Notice what type of signal we have today, a bullish engulfing signal, belt hold type signal. So what's that make us anticipate here? That we're in a J-hook pattern. If this has already moved from 29 to 40, 11 points, you could be heading up to the, what's 11 points? Up into the $50 area. So you want to keep an eye on that one. VHI. But this is, again, where you kind of observe the obvious. Where did this bullish Harami occur? Right after they hit smack dab off the 50-day moving average. Now where are they? They're back up above the T-line. This one I wouldn't be afraid to be buying tomorrow on positive trading, using the T-line again as your stop. AMX, J-hook pattern. Now, is this a shooting star? Number one, it's not quite 2 times greater than the body. And number two, look where your stochastics are. To me, this is a fry pan bottom breakout J-hook pattern. So if it opens positive, what's that tell us about this right here? That just tells us that was profit taking hitting in. If they open it positive, it tells you the profit taking's over. They're still buying. AEG, also kind of a wave 1, wave 2 J-hook. Gap up, where's your next target? Pretty much the 200-day moving average. Now, some of your best trade setups are the slow curves. This is LFG. Notice where it just now broke out through all this resistance level. Where's your likely possible next target? If you draw a line up through the tops, they could pop it up here. So that'd be a good, percentage-wise would be good. And number 2, your timing can be right smack dab on target, because this is where they'll be breaking it out, coming out of the slow curve. Same scenario for AYI. J-hook pattern, slow curve, little doji gap up. Let's make this bigger. If they open this positive, you want to be buying immediately. GPK, there's that slow curve also. So the reason you want to go after the slow curves is because the results are usually very good. I mean, they skyrocket after a slow curve, number 1. And number 2, the probabilities of being in the right trade at the right time is extremely good. This PPC, this is more of a fry pan bottom, but it's getting to the area where if it starts breaking out through this area, you get some good running room. And ASMI, that's not what I want, is it? Something is extremely wrong here. S.ASMI. Well, shows about ASML. That might be it. Okay. ASML. Terrible handwriting, whoever sent those notes over. Another J-hook pattern in the making. Get ready to, or a slow curve setup. This one you can be buying on positive trading tomorrow. And NTAP also had a nice slow curve breaking out. Notice how it's breaking out, a doji sandwich. And what did it do after the doji? Gapped up, telling us that this level was not going to be any resistance at all. So again, these are very high probability, high profit trades. I wouldn't be afraid to be buying that one on positive trading tomorrow also. All right, a few other good ones on the long side. MED, getting ready for a J-hook pattern. I'd keep an eye on this one. And, oh, there it was, REX, way down there. All right. And BLT was one that we had made some good profit in, well, a little bit of a profit anyways, in this uptrend. Now look at the J-hook. You've got that left-right combo right here at the T-line. If this opens positive, your next target should be at least here and possibly up into this range. So this is one you want to keep an eye on. And one more on the long side was TNet. TNet, kicker type signal off the 50, getting up to this breakout area. If this opens positive, you want to be buying, because if this does a doji sandwich, you're going to be in the breakout territory. Okay, those were the longs. The shorts, some very nice pattern setups. Where is this likely to come to? This is LNG. Where could this be breaking down to? Back to the 50. So we're looking for things that are breaking over, because once they start selling these, because this tells us the selling sentiment is coming in, getting a little bit panicky, more panicky. They're bailing out. So if you're going short, that's the type you want to get into. You want to also find stocks where everybody was very enthusiastic on the upside, This is DGLY. If you were long, it should have been closed out today, and you got a good possibility of going short. Where's your target? There's one target. There's a gap here to fill. And if we throw Fibonacci numbers on here, starting from here, going all the way to the top, that's at the 50. There's the 62.5%. So there's possibility that they could be bailing out of this, even to the point where they're taking it all the way back down to the test the 50. Now, let's see if I can get rid of this stuff. There we go. All right, good. ACHN, which was making some good money on the upside, now has a doji gap down. Where's the likely target? About 20% lower down here at the 50-day moving average. And Tesla got whacked today. Here's another one where when they start gapping something down. Now, I thought I had mentioned in the options room that I was closing out options on a lot of positions for two reasons, because they're all coming back down toward the T-line, and the market was looking soggy, and we only had as Friday, we only had this week before expiration. So some of these that were starting to look soggy, they were going to lose a lot of their value if they showed more selling on Monday, because there's a big psychological change from owning something the week before expiration and owning a call the week of expiration. The premium will start dissipating very quickly. So I closed out half of my positions. Part of half of the positions was Tesla, and then closed out the other when it gapped down today. Took a loss on it, obviously, because I think I was getting it over here with the premiums building up. Time value was starting to lessen, and so anyways, this is kind of an evaluation of if you see something that's not looking real good and you're running out of time on your option trades, get out of the trade. There's other situations out there that still look real good. Now, ACRX, notice where this failed, right here at the 50. That tells me they're going to come back down at least and test the low, if not even going lower. So when you can see exactly, if we were buying right here, everybody would be asking, where do you think your target is? You want to see what it does once it gets to the first resistance level. And when I say you want to see, if we can see that they're not pushing through and they're trading indecisively, get ready to start taking profits, because that's probably what everybody else is doing at that level. We just happen to be able to see it graphically much faster than most charting techniques. Here's kind of the bearish scoop pattern. You had your left-right combo close below the T-line. You had this big swoop down day. That means you could probably head all the way down into this territory. So you want to keep an eye on going short on ECOM, ECOM. And Maxwell. Kind of this rounding top, failure at the T-line. This one you want to be going short if it shows weakness. GIMO. Let's make these bigger. GIMO, downtrend. They popped it back up to the 50. Bearish engulfing signal. You can be shorting this one if it has enough volume. There's a lot of good-looking short charts out there, but some of them don't have enough volume that if you try to short them, that you can get stock to short. CON or CONN, same scenario, like a little evening star signal. Tells you there's probably going to be a slingshot effect to the downside. Wave 1, whoop. Wave 2, wave 3 could be all the way down into this range. And VJet, another one that we'd made good money at one time on the upside, and then it started waffling. But notice where it came up. Came up to the 50, failed. Where did it come this time? 50 and failed. This one you might want to be going short, because if this move was 10 points, this could take you down pretty far. All right, a few more. Tweeter, we had made good money on the long side on this one. Again, I closed out this one on the little doji confirmation for two reasons. Because the first place it was probably going to come back to is the T-line, number one. And number two, if the markets looked soft or looked like they weren't going up anymore, more than likely they were going to come back at least to the T-line. And that means it's going to be a while before it could get back in an uptrend. So that was kind of a combination of the market starting to look soggy and the prospect of coming back to the T-line looked pretty good. Where do you say VJet was going? VJet could have another big down move. Same magnitude as, that's not what I want, is it? That was VJet. Or, no, that was VNet. Completely different animal. If they've moved from, it looked like the 26, 27 range down here to the 15 range, that could take you all the way down into the $5 area if they keep this downtrend in progress. PEIX, don't know where that target could be. I mean, it's already surpassed the 50. If I was short, I'd just stay short until you see a buy signal. And TKMR. Notice the wedge. The wedge had the opportunity of breaking out to the upside today, but it came back in again. This is still a wedge that tells you they are either going to break it down or break it up. So right now we've got a little evening star signal getting right out here at the point. If they start selling this off and breaking this downward trend channel, at least you know it's coming back to the 50-day moving average or the 200. DDD tried to get up through the 50 and it couldn't. It failed twice, a left-right combo. And then a doji evening star type signal to close back below the T-line. Another case where they got as high as 69 and closed down here at, let's say, around the $49 area. 20 points from here could take you down into the $32 range. And Yoku. Notice the downtrend, and kind of pretty much you could draw the line right across the tops here. Shooting star, failure. At least we know we've got a running start on a profitable short trade for this level. And then if it does something along this same magnitude, you're down another 6 points or so. So anyways, right now with these market conditions, you definitely want to have both long and shorts, and the longer this downtrend persists, obviously the weaker the bullish charts are getting and the stronger the bearish charts are getting. So you always want to have at least in this type of market both longs and shorts in the portfolio. So with that, are there any general questions on candlesticks? I don't see anybody typing, so Jim, go ahead and do the double line. And in 4.3 seconds, do the second double line. On FAX, what is it? That told you this is still very bearish. That even when they gapped it way up, they were still selling it off immediately. This is still heading down. Okay. DRD. S. TRD. That's a nice little gap up, and not only was it a doji gap up, but notice that it kind of broke this downtrending channel. Let's see, I think I could do this better with trend. So it broke through the 50, so more than likely the 200 is now your next target. Fold, we're looking at to buy back, not with any great hurriedness, but definitely want to see a close back up above the T line, hopefully a morning star type signal. American Express, stay short on this one. That's a that's telling me a wave 1, wave 2, failure at the 200 area. Wave 3 could take you down. Same magnitude as that move right there. Apache. I wouldn't be long or short this right now. If I was short, you stay short until you see a close above the T line, but I definitely wouldn't be going long until you see a close above the T line. And Avis, let's make this a little bit bigger. This one is showing me a lot of indecisiveness, obviously, right here at the 50. I'd be ready to buy this, but on a positive candle closing above the T line. Valero, you stay short, but if they start opening this positive tomorrow after today's bullish Harami tweezer bottom, I'd cover my short position. You can always reshort it if it comes back down through the open of today. If you have a $15,000 account, how many positions should you have, and how much per position? Mark, I would, if I had a $15,000 account learning how to use candlesticks, I'd probably have maybe 4 $3,800, whatever that turns out to be, positions. And each one would be the same dollar amount. Remember, the more you can keep your emotions out of your trading, the better off you're going to be, because it's usually the emotions that get people when it comes to investing. So if each unit is one, or each position is one unit, that way you don't have a emotional attachment to any particular position. You're buying or selling one unit of your portfolio. HIMX, get ready to go short if this opens weaker tomorrow. If you didn't close this out today on, if you're long, you definitely want to be out of it if it starts trading weaker tomorrow. And BBY, stay long, but at this point, use today's open as your stop. A shooting star in the overbought area, but you just now broke out through this resistance level. But I would use today's open. If it came back down through there, they're bringing it back down to test the T line. LPX, not quite a bullish engulfing. Maybe it is. Can't tell. If this is a bullish engulfing, yes, you want to be buying this with the prospect at your next target, especially if they break it out through this level. If I was buying this, I'd put my buy stop at whatever this was, 1450. I'd put it at 1455, knowing it broke through that downtrending channel. What was that? That was, and Met kicker, or not kicker, a J-hook type pattern. If I was going to buy this, I'd have a buy stop right up here above this level, telling me they finally broke out. An MTRX, this one you can be buying. Just be careful, though. It has to open positive and trade positive tomorrow. If it closes back below the T line, it's getting ready for the next leg down to the bottom of that trend channel. And DNDN, haven't seen that one for a while. That's a nice little slow curve breakout. This one you can be buying. Just make sure your volume's big enough to not get you caught in it. And Noodles, You did break out of this downtrending channel. That's not what I wanted to do. Let's make it this way. So if you own it, you stay long, but it has to open positive and trade positive. If it opens lower, it's also caught in this downtrending channel. DRI, stay long on this one. That's a little breakout. I'd stay long, again, using the T-line as your stop. And VVCCF, S.VVCCF. That one's not coming up. AMBA has been getting hit pretty hard. Another one that you could possibly go short with, looking for it to come back down at least to this is a 50-day moving average. And FEYE. This one has to open positive also, showing that it's supporting off the 50. So if I was long this one, I probably wouldn't have closed it out today because of the 50 acting as support, but you definitely have to see it open positive tomorrow to stay in it. What do you think about Sprint? S.S. Stay long. I'd probably at this point use the 50 as my stop until the T-line caught up. And SGMS. This one you stay long as it stays above the T-line. If I was looking to buy this, I'd put a buy stop at right above this level. If it comes up through there, it's telling us wave 1, wave 2, wave 3. And Ford Motor Company. Right now, if you're trading it, you shouldn't be trading it. Right now, yeah, Ford has gotten kind of lethargic here recently. Still in a very slow downtrend. At this point, because we're holding it long term, still holding it long term. But if I was looking to trade it, obviously you wouldn't be long at this point. And you buy long term on the next major buy signal. Bidu moving absolutely sideways. Now notice, remember, one of the observations that you'll see in the observation video is if you have a flat trading range and it ends with a doji, get ready for a pop one way or the other. So if this opens positive, you start buying immediately. It means it's breaking out to the upside and vice versa if it opens lower. LLL, just stay long as it stays above the T-line. SEM, you stay short on this one. You can see that you're in a downtrend. More than likely, you're bringing it back to the bottom of the trend channel. ACAD, evening star signal. Get ready to, if you own this one, it has to open positive and trade positive to stay in it. If it opens lower, you close out the position and or see about going short. And Tazar, no, these aren't 15-minute charts. These are they're just delayed charts. Oh, I am on a 15-minute chart. How did that happen? Well, how long has that been going on? Let me see where that might have. Okay, noodles. That one. Bidu. Okay, so it happened on Bidu. Maybe, let's see, Ford. No, so it was Bidu that was the culprit. Bidu, if this opens lower, start shorting and looking for the next support level. There's some gaps to be filled down here. Let's get rid of that little line. LLL, that's a good looking chart. Now, see how that improved? just stay long as that stays above the T line. And SEM, get ready to short this one if it opens weaker, which means the 200 is not acting as support. You can see the slow deterioration of investor confidence in that one. ACAD, that also you get ready to go short. Notice where they failed when they gapped it up in the overbought condition and started back down. So this one you could be shorting on weakness. I think we did AMBA. AMBA you can be shorting on weakness. Tazar needed to break out to the upside. Obviously it didn't. So this one, if you own it, it has to open positive also tomorrow to stay long. SanDisk. SanDisk, very simple. If you're long, it has to stay above the 50, and so it has to open positive and trade positive. If it opens lower, you can be shorting this one. ACAD short, yes, you can be going short on that one. And AMBA, you could be going short on this one. Philip Morris, nice little scoop type pattern. This one, look for the 45 degree to continue off of here. And DGAZ, I wouldn't be trading this one either long or short. That's a sideways chart. I'd be someplace else. Netflix, get ready to go short, especially if this comes down to the 50. Google has to open positive for it to stay in the uptrending channel. Wouldn't necessarily trade Google, but once again, use this as a indicator of what the general market is doing. And it's pretty much telling us what the general market is doing. QILK, this one I probably wouldn't go short only because there isn't a real sell signal here. It's just a big down day. I wouldn't, if I was long, I'd close it out on any weakness tomorrow, but I wouldn't necessarily go short. WFC, this one you can be buying. Just be aware of the lack of magnitude of price movement on this one. Is the blue size failure still a blue failure if the 200 SMA is above the 50 instead of below the 50? Yes. It's just there might be another target for it to look for. SAAS, bearish belt hold, yes. And notice where it did it. It gapped out of the trend channel, came back into the trend channel. That pretty much is telling us the downtrend is still in progress. ACRX, a bearish J hook, yes. And a failure here at the, no, that's not a bearish J hook. Remember, a bearish J hook has a downtrend, then it pops up and heads down. That's just kind of a failure of an uptrend. All right, VLCCF. All right, this one you can be shorting on weakness tomorrow with the doji gap down. And DRV, stay long on this one. Good prospect of going to the 200-day moving average. Okay, 15-minute trade. All right. What is the observation video? Lori, I've been requested that there's a lot of things that aren't real candlestick patterns. QCOM, you get ready to short this one. Notice kind of the wedge formation, getting ready to break out to the downside. So I'm putting together observations that aren't anything more than 40 years experience of trading candlesticks, where there are patterns and situations out there that are recognizable based upon the the signals, but they just haven't been, I'll say, I guess it's more of a teaching of what should you be looking for, what's the psychology of a price move. It might be things like stutter steps, or like I had mentioned before, that if you see flat trading with a doji at the end of it, look for a pop one way or the other. So there's probably about 15 to 20 other indicators that are just kind of common, not common sense, but common knowledge application of what prices usually do. So I'm putting that all together in a kind of what we call the observation and rules video. QCOM, let's see, ESRX. Another one that's probably coming back down to the 200-day moving average. Just be aware of what the magnitude. Oh, no, it's not ready yet. I'm putting it together. But as soon as it's together, everybody will have availability to it. Okay, one more. CMGE. I don't know what to tell you there. If it's closed below the T line, this chart doesn't intrigue me one way or the other. I wouldn't be long or short that one. This one, get ready to go short on weakness with the expectation the 50 is your first target. Okay, everybody, we'll be back here. Oh, no, we won't. Tomorrow I'm going to be hopefully getting pulverized. So I should be hopefully back before noon. I hope I'm not in there longer than that. So anyways, everybody have a good evening. We'll see you tomorrow sometime.